Here we are, another day of live trading with Frank. It's September 28th, 2016. It's 11 o'clock Central Standard Time, noon Eastern Standard Time. Today I'm going to look at a broken wing butterfly in the spider. The spider right now is, gosh, where is it? Well, we'll see. We'll close the PowerPoint and go to OptionVue. It's right around 2:15. Janet Yellen has been speaking all day long, and I'm trying to find something to do. First I looked at October. That was unacceptable. Now I'm looking at November for a trade. So let's analyze this and see what it's like. Now my broken wings, I like my upside to be a bit more protected than it is right now. You notice this isn't balanced. Part of my approach to broken wing butterflies is to flatline the upside so I don't lose any money at T plus 0. That's basically my strategy. I always look as a market maker, or former market maker, now I'm a retail trader just like you. I look at T plus 0, which is the dotted line here. I'm always concerned about how tomorrow looks, or how today looks. What's going to happen if we go to up to 220, which is the same as close to 2200 on the SPX? How does the downside look? So right now it's like I don't really know. One thing that's sort of unfortunate is while October has half-point strikes, November does not. It'd make it a whole lot easier to manipulate or control this delta of -3 here. So we could go flat this way, and I think there's a difference in delta of 3.8 between the 217 call and the 216 call. So let's put that in there and analyze. Now that's a bit better. One thing I like about OptionVue is the ability to superimpose. And one thing, I'm going to make this a little bigger. I think it tells us and center it. Okay, let's superimpose. Okay, I like the upside much better on this one than that one. I'm basically break even to about probably 2120. So I feel much more comfortable to the upside, and that's something the upside is something that many traders tend to ignore. I've noticed this among students and myself. We tend to ignore the downside. So let's get this back centered again. Okay, not sure what happened here. I go back and forth and we lose everything. Okay, so that's that. I'm selling. So this is a broken wing iron butterfly. I called it a broken wing butterfly. It's a broken wing butterfly would be I would buy the 2000 call, sell two 2010 calls, and buy one 2016 call. A broken wing is will have this broken wing iron butterfly will have the exact same risk graph as a broken wing butterfly, assuming the strikes are the same. But on this one, I'm short the 210 216 call vertical, and I'm short the 210 200 put vertical. So let's look at this one. Whoops, I hit the wrong button. Okay, I look at this and I'm going, okay, it's rather benign. It's totally benign to the upside. If I look at T plus 0, my break even is at basically 2142. We go down to the 211 level, and I've lost all of $9 on this. Now trust me, if we go down to the 211 level, I'm going to lose a bit more than that, because my Vega at that point is about, it's minus 1150. I'll probably be down 20 bucks. But a lot of the movement to the downside and the associated vega or increase in volatility is what I call an ephemeral event. It's short-lived. If we stay there, that volatility or a vega effect will disappear. So let's add another date and look and see what this looks like. About, that's 26 days out. I tend not to keep these longer than 28 days. Okay, and when I say 28 days before expiration. So I look at this, and right now I would make about $35. Based on an investment of $429 would be about 8%. I feel pretty comfortable with that. 8% a month would be about 100% a year. So part of my object is to control this risk. So right now, let's see where this is closing. Now, we'll set it up in Thinkorswim. So I'm looking at selling this for $572, and it's the 200, 211, 2116 broken wing iron butterfly. And so what I'm doing is I'm writing this down. I don't transport directly to Thinkorswim. So here, okay, we'll get this in here somehow. Go to trade. The product I want is the spider. Well, we don't have that there, so I'll put it in. Spider. We'll try again. Okay. I'm on trade. I want to trade a spread. They don't have iron butterflies, which I find rather disconcerting. But I'll use the iron condor. We'll open up November 18th. Okay. Quite frankly, I'll just zap one of these. Okay, if you remember, I want to sell the 211, or I want to buy the 216 call. I want to sell the 211 call. I want to buy the 200 put. And I want to sell the 211 put. Now I'm only going to do this one time. This is for teaching purposes only. I'm not saying do what I do, but put this in paper trading. Watch. This is a good size to do it. So, oh my gosh, we're at 516, 519. I came up with 572. The question becomes to me, what did I do wrong? That's a nice narrow market, actually. But I wrote down 572, so we need to check that. And okay, I sold the well, actually, there I was wrong. This is old eyes, and this is why I double check everything. This is the 210 that I decided to do. Okay, it gives me a little more protection to the downside, and yes, it's trading 572. Go back to Thinkorswim. I double check everything I do because it's so easy to make mistakes. Attention to detail is pretty important here. Well, very important. One nice thing about trading and learning with the spider is that the spider is what I would call hyperliquid, meaning that it's easy to get in, easy to get out. Okay, the midpoint is 571 here. One thing I generally do in Thinkorswim, you can click on this and not analyze. Well, you can analyze the trade in Thinkorswim. market depth for this call. Okay, and it comes over here. I don't like the analyze on Thinkorswim. That's me. I can detach this if I want to. And this is what the trade looks like. It's 569, 574, 91 by 583. Okay. So this is what they call the composite. They have the best bid and best offer on every exchange for the entire spread. Then they take it out option by option by option by option. So you get a sense of where it trades. Okay, right now I'm going to try and sell. Well, let's try and sell one at 572. We have, we'll see how I do. Confirm. And I'm going to send one. We'll go to monitor. Here I have one working order. Okay, so this shows me what I'm doing. The price is actually 571 working. That means that's that best bid, best offer for the entire spread that we saw on the market depth. Since I don't really care about that penny right now, I'm going to do a cancel replace. I'm going to cancel this 572 offer and replace it with a 571 offer. And confirm and send. Go back to the monitor page, and nothing's happening here. Okay, right now it's you'll notice it's 11:17 on Wednesday, September 28th. I'm going to pause this for a moment and see what. Actually, I'm not going to pause. We'll wait and see what happens here. I'll look at the market depth again. It's 568, 574. The underlying here, the spider, has actually gone up a bit since we started doing this. So I am going down to 570. Primarily because since I'm doing this for teaching purposes, I'm not going to worry about a whole lot. That dollar. And I'm trading this in my own account right now. Okay. We're 567, 576, 400 by 67. I'm offering it. Closer to the bid, but there doesn't appear to be a whole lot of interest in this. If we go up, I'll probably get filled on it a little quicker. Right now, we are trading 215.26, 215.32. 4,000 bid for it, 568. This is the most boring part. A lot of trading is patience versus panic. And right now my patience wanes when I'm doing one of these recordings, because if I was just putting this on by myself, I would have thrown in it at 571 and said, okay, fine. That's what I'm going to do. But I'm filled! Eureka! Of course, who knows what'll happen. Okay, so now we're filled. I go back to OptionVue. Okay. Well, first of all, I have the prices here, so I'm going to enter these prices into OptionVue. And minimize this so it's easier to move out. I'm going to convert the trades. Okay. go to the trade log and put in the prices. We sold this for 8.01. We NOV 216. I bought for 383. The NOV 200 put, I paid $1.07. And the NOV 210 put, I sold at $2.59. Okay. So right now, gosh, where are we? I'm down $3 whole. Not bad. So I'll be posting this as we move along. This is generally one of those strategies that you do not have to watch all the time. Aha! What did Frank forget to do? Let me show you what I forgot to do. Strange things can happen. I have this position. Now, one thing I can do is, I have broken wing butterflies. So one thing I can do here is I can go like this, highlight it, right click, and move to group, broken wings. Okay, now it's in broken wings. Okay, click this down. So I can sit here and right click and create closing order. So right now the midpoint's 572. I paid 570. If I wanted to make 10%, and you know, in a perfect world, that's what I would do. That would be 57 minus 57. Okay? One thing I do to keep myself honest is, so 570 minus 57 is 57 13. No? Yes. So we'll go like this. 0.13. Well, no, 0.1. 0.13. So I'm going to buy one contract, and I check everything. It's the same. It's a 200, 210, 216 broken wing iron butterfly for 113. That's a 10% profit. I am going to make that its limit, but I'm not putting it in for the day. This is something I put on my as a discipline. People say, well, Frank, why good till cancel? What if you can get more out of it? This is my goal. I would be very happy to get a 10% rate of return on this. So let's confirm and send. Go back to the monitor, and I can see this trade right here, how we're doing it on a moment-to-moment basis. I'm down a couple bucks. Life is actually pretty good. So let's stay in touch. I'll stay in touch with you. I'll give you updates as we move along. If you have any questions about it, just send a quick email to me at fjfahey@gmail.com. So thanks a lot. This is a lot of fun, and I shall talk to you soon.